Good evening and welcome to First Issues. We have a jam-packed one for you tonight, beginning with an incentive-filled initiative by the Botswana Housing Corporation to educate Botswana on the value of owning a house.
Statistics have shown that the price of a house doubles every 7 years or so.
In the second segment, we take a look at the tax implications of the 2014 national budget for both the consumer and for business.
Wouldn't it be one step to start taxing parastatals the same way that we tax other taxpayers?
We continue to take a look at the changing dynamics of leadership with international speaker Renee Carriol.
We live in a world that the Americans call it VUCA, V-U-C-A, volatile, unpredictable, complex, ambiguous.
Countries have developed different programs to try and meet their population's ever-increasing demand for housing.
The demand is evident in skyrocketing property prices, as well as the masses that congregate every time there are allocations of plots in and around the city.
The waiting list for the Self-Help Housing Agency, better known as SHA, in and around Gaborone, has been frozen at around 20,000 people since 2010. The Ministry of Lands and Housing, on the other hand, have over 36,000 of our total 2 million population hoping to be allocated plots.
Others have a more laissez-faire attitude and have not stopped to consider the pros and cons of renting for decades, spending substantial amounts of money that will not bear any incremental rewards.
2014, however, has started off with some good news for those that do wish to own a home. First, with a transfer duty cut for first-time buyers announced in the 2014-2015 budget speech, and now a year-long sitting tenants sales campaign by the Botswana Housing Corporation. The BHC bid aims to get their sitting tenants to appreciate the value of investing in property and to purchase the houses they reside in. The BHC has also mobilized different merchants and financial institutions in their campaign.
But will this endeavor be enough to motivate tenants, some of whom have been renting from the corporation for decades, enjoying rental rates frozen at dirt cheap prices, to take on a mortgage? What does Reginald Mutswaiso, CEO of the corporation, have to say about those who seem more than happy to rent and ever so reluctant to buy?
You would realize that as Botswana Housing Corporation, we haven't adjusted our prices for the past 10 years. In a way that's set to maybe discourage some people to say if they stayed in perpetually renting, they could be gaining more. I mean, compared maybe to the mortgage rentals that they will be paying if they bought the house. But the reality is this, that they will be missing on the opportunity of the capital appreciation of those houses. The statistics have shown that the price of a house doubles every 7 years or so. So someone who could have bought a house for 200,000 about 10 years back, now that house is around 400 or 500,000. So they are missing an opportunity to invest.
Do you know of any other reasons why people are not buying BHC houses?
From the outset, there is an education or information gap. People don't really appreciate the value of owning a house. People don't buy because maybe they don't have full information of all the advantages that come with owning a house. For some people, people who come to towns, to cities, Gaborone, Lobati, Francistown, they do have homes elsewhere. Maybe someone has got a house in Matangwane and say, why should I buy a house in Francistown? And I have my house in Molapolole, why should I buy the Gaborone house? I'm saying you will always need to buy another house. If you take a house as an investment, then you've got more reason why you should buy. The reality is this, that if you don't buy this house and maybe you retire and go back to Moshopa, that's the end of the relationship between you and that house. However, if you bought that house, you could retire and go back to Moshopa, and still this house will be yours, and it will be giving you income far in excess of what you've been paying to BHC. The reality is that a house that you buy from you lease from BHC now, and you are paying 1,000 pula, out there in the open market, it's about 4,000 or 5,000 pula. So there is that wealth that you could tap in. Instead of you looking at it as paying 1,000 a month to BHC, you could be making 4,000 out of that house because of the differential between what you are paying and what the real market rates are for that lease.
This campaign is targeting sit-in tenants. Have you formulated anything for those that don't have their foot in the door, so to speak, who are not current residents of BHC houses?
Yes, indeed, this campaign is about those sitting tenants who can come in and buy. But at the back of our mind, the primary objective and driver here is those people outside who haven't bought a house from BHC or haven't had an opportunity to live in a BHC house. Definitely what we want to do is that the sitting tenants should buy their houses so that we have that money that we can now build new houses and cater for those we haven't helped yet.
You mentioned before that some of your sit-in tenants have been renting for 20 or so years. How are you going to cater for those that can't afford to buy the BHC houses?
Well, at times this affordability really is just an idea. And it's because at times people are scared of numbers. If I say this house is worth 250,000, you may think it's impossible for you to raise this 250,000. But that's why we've partnered with the banks and so on. Once they explain to you the process and what your commitment would be on a monthly basis, you may find that, in fact, it is affordable. Well, if you've been there for years and you've been paying a rental of, say, just 500 a month, my idea is that perhaps you've been saving somewhere and thinking of other things to do. We are saying, don't go and buy that car now that you've been saving for. Perhaps put your money into housing. And we are saying as well, you've been staying under that roof as a family. Instead of losing it, we are saying if you are siblings or what, you could come together and help either your dad or your mom to buy this house. And certainly you've enjoyed the stay there as a family. You could buy that house as a family. And that could maybe spiral, being the first house, and then with the mortgage difference and the valuation, it might lead you as a family now to buy the second and the third house. That's how other people do it. In fact, in other economies, people have got joint mortgages where you and your friend can buy a house jointly. And from either the return in terms of rentals or the appreciation, it would allow you to buy the second house and the third house.
Welcome back to the show. In this segment, we continue to take a look at the economic forecast for 2014 as set out in the recent national budget. To unpack the budget's tax implications is Rudy Binadel, audit partner at PricewaterhouseCoopers. He says of the 26 pages or 106 paragraphs that made up the budget speech, only 2 were dedicated to the topic of tax. And he did his best to analyze the implications of the following concise statements.
We have to expand the revenue base, and we must simplify the tax regime. The consequence that I can see out of that is really that the Income Tax Act will most probably be amended so that there's a prevention of erosion of the tax base. What those are, we'll get to what may change, because I really can't tell you. The minister didn't tell us about those. What the minister did tell us is that he will amend the Value-Added Tax Act. And he will amend the Value-Added Tax Act by bringing in a new threshold of 1 million pula rather than 500,000 pula for registration. by expanding the basic foodstuffs on which we pay no VAT, and he's going to include rice, milk, and vegetables in there. But also, this used to be zero rated. It will now be exempted. Now, for the consumer, that really means, what does that mean? Still 0%. But for the producers and for supermarket chains who sell these goods, it may bring an added administrative complication, because now suddenly a supermarket may find itself in the same position that a bank finds itself. Portion of its income is VATable, another portion is exempt, and there's a balancing act that needs to be applied. I think to start off with, this is potentially going to be a bit of an administrative hassle, but most probably most of the enterprises will sail through that. And then last but not least, farming equipment will be exempted. You can see that there is recognition that agriculture is important to the Botswana economy. The third thing that the Honourable Minister said, and I don't see, I must admit, from where I'm standing and the lights are a bit bright, but I don't see very many young people who may be first-time home buyers, but the Honourable Minister said he's going to amend the Transfer Duty Act so that especially first-time home buyers find it easier to afford new properties. So what we can expect out of that is lower transfer duty. Ladies and gentlemen, that is what I can tell you. Those are the two paragraphs. So now we're going into the realm of a crystal ball.
Using what can best be described as calculated divination, Mr. Binadel says we are soon to see the Botswana Unified Revenue Service catch up with other authorities and implement a more rigorous enforcement of tax.
I think we can look at recent events, recent trends, not only here, but also in our region, in other emerging economies, and in what the IMF have predicted or have asked us to do, to have a look at what could be coming. I think the first basic building block, and this is not necessarily fiscal legislation, is we've got to accept a more rigorous enforcement of tax. If you thought that having auditors, and I've seen KPMG here, I've seen PwC's here, I've seen Deloitte here, Grant Thornton here, if you think those auditors are going to go through your undergarments and that we are a pain, I think we need to accept that BERS will catch up, and they have to a certain extent, with where the rest of the world's revenue authorities are. And we're going to see much, much more rigor in the enforcement and auditing of taxpayers. However, what needs to happen with that is you've got to walk hand in hand with your taxpayer. And something that I think a number of role players have asked for over the years is what the IMF has called a social compact. I'm not sure whether that's actually just a misspelling. Maybe it's supposed to be contract. I would just call it a pact. But a social compact between the taxpayer and BERS, or the Revenue Authority. In other words, let's have more of an open relationship, let us build trust, and let us make sure that we do the best that we can working together. BERS gives us more guidelines, definitive statements as to how things should be applied. And that is another building block that we're seeing all over the world. Efficiencies coming through e-filing, automated assessments, and automated assessments not only for individuals, for companies as well. That is a process that has started some time ago, in which quite certainly we will see concluding in the next few years.
Our analyst also expects IMF recommendations to have a marked impact on areas such as capital gains tax, indirect tax, and tax incentives.
Whether we like it or not, the IMF has made certain recommendations on the reform of capital gains tax. Some of this does not go well with the stated objectives for our economy. For example, lifting the exemption on Botswana Stock Exchange shares. Also taking away the inflation indexing that is allowed on other assets, and rather having a flat rate for indexation. But capital gains tax is most probably one of those taxes that is aimed at the more affluent of society, and it's an easy thing to simplify and to make a bit more equitable. indirect tax reforms. VAT is most probably the most equitable of taxes. It is the easiest to apply. And Botswana has got one of the most well thought through and implemented VAT systems in our region. However, when we really look at it, our VAT revenues are underperforming compared to where they should be. So I would not be surprised if we see changes around VAT administration and making sure that the VAT system works better and faster and gets the cash into our revenue authorities in a much more timely manner. Over the last few years, we've seen a number of increases in withholding taxes. Effectively, what has happened is the fiscus has moved an administrative burden from the fiscus to the taxpayer. The taxpayer deducts the withholding tax. Are we going to see more of that? Or are we going to see simplification potentially where these withholding taxes become final taxes? If we think about a withholding tax in the construction industry is an industry where determining your taxable income is a difficult question. And it may just be easier to simplify matters and say the withholding tax becomes a final tax. Or are we going to see a pulling back from withholding taxes? And then lastly, the IMF has said, reduce the number of tax incentives. Don't have special approval orders. Don't have tax holidays. Think about the rollover of farming losses into perpetuity. Don't have those things. The IMF doesn't believe that those work. But those are things that the IMF have said. And those are our recent trends.
Rudy Binedell now details what implications the government's economic strategy and its related fiscal legislation are most likely to have on tax matters this year.
Over and above that, I also think that if I can look into my crystal ball, potentially we should look at what government is trying to achieve for the economy. What is the government's economic strategy? And how can fiscal legislation support that? And what have we got? We've got an export diversification plan from government, centered around the diamond cluster, around non-diamond mining, beef, tourism, and financial services. So we want to have exports growing. For us to have exports growing, we're going to have to catch up with the rest of the world on transfer pricing legislation. I have certainly seen in the last 3-4 months many more detailed questions coming to my clients from the Revenue Authority on transfer pricing. We have not seen the legislation, but we are certainly becoming much more sophisticated. Similarly, thin capitalization rules may be brought in. Thin capitalization is one of the ways that people are actually able to avoid tax that they should have paid. The IMF has recommended that we have a thin capitalization of 3-to-1. In other words, if your debt exceeds 3 times your equity, the interest that you pay on that excess will actually become a dividend, and you won't be allowed it as a tax deduction, and there will be withholding tax on that dividend. IFSC companies. The IMF has said, scrap IFSC companies. That was their recommendation. I've left it on here because in my crystal ball, I believe with financial services being one of the clusters being focused on, and one of our most successful IFSC companies being a financial services company, and I won't mention the name because they're sort of in competition with FNB, I believe that there will be a renewed focus on IFSC companies, on the benefits that they offer from a tax perspective, and on the fact that they can bring inward investment and that we can have a lot of capital flows across borders. Similarly, if we have to take exports, we need to improve our customs administration. 8 of the countries that actually in that global doing business report got ticks behind their names for facilitating work across borders and doing business across borders in 2014, simplified the manner in which you can get documentation for customs, in which you go through customs procedures, etc.
Lastly, our guest shares his views on the proposed measure to tax parastatals at the same rates as other entities.
The Minister spoke about in his budget speech the need to more efficiently and effectively run parastatals, almost pre-commercialize them. BMC, BDC have special tax regimes. Most of the other parastatals do not pay taxes at all. Wouldn't it be one step to start taxing parastatals the same way that we tax other taxpayers? That would certainly broaden the tax base and bring commercialization into the parastatals. I would, however, not want to be in the room when the Commissioner sits there and debates the deductibility of certain impairments and certain losses for tax purposes, whether those are in the production of income or not. Other than the known amendments to the VAT Act, the known amendments to the Transfer Duty Act, we really will not know what is in store for us from this budget from a tax perspective until the Minister presents further amendments to Parliament. And when that happens, we'll be in a position which somebody said long ago, an unknown author, after the government takes enough to balance the budget, the taxpayer has the job of budgeting the balance.
The last segment of tonight's program presents a further learnings from our recent sit-down with international leadership author and speaker Rene Carriol while he was in the country. Who does he think should be the driver of change within an organization?
If you'd asked me 20 years ago, we'd be saying, if you want change, you want transformation, it's the chief executive. I don't think that's possible anymore. We live in a world that the Americans call it VUCA, V-U-C-A, volatile, unpredictable, complex, ambiguous. The world is not steady state anymore. We're finding hard to forecast, hard to predict. When Apple can post a profits warning and Google can post a profits warning, who can predict the future? So now, if it's that difficult, one person can't do it on their own anymore. Transformation is about teams. I look at the best leaders in the world. I've yet to find a leader who's flawless. I've yet to find a leader that can do everything. But I can find leadership teams that are flawless. I can find leadership teams who can do everything. So nowadays, we get the leader, we understand what they're really good at and what they're not so good at. And we build a team around them to balance out the things they're not so good at. So as Jose Mourinho says at Chelsea, the chief executive is no longer the star, the team is the star. The team wins. So that demands collegiate behavior, collaboration, and we've got to move away from what Africa's been doing for years. I employ people who look like me, think like me, behave like me, who've come from where I've come from, which leads to groupthink. As I keep saying to the people I'm working with, if there's two of you in the top team who agree on everything, one of you is superfluous. We don't need one of you. The reason for having a great team together is that you put them together, they create synergy where 2 and 2 can equal 5. They're symbiotic, we're all heading in the same direction, we've got common purpose, common goals, we put trust at the bottom, and then we can argue, we can disagree, but at the end of the day, when we leave here, we're one team heading in the same direction.